All right, good morning, traders. TG Watkins here. Looks like we should be good to go. And good to see you guys already lighting up the comments. Cool. All right. So one other thing, we just want to let you guys know we got a few more days. I think it was like January 12th or January 15th that this offer will continue to run. So if you guys are interested, we still have 30% store-wide on the sale, and it's new 24. Right down here, new 24 is going to be the link if you guys are interested. So come check it out. All right, if you come over to profitpilot.com, this is the website that I run, and we have a couple, let's see, a couple newsletters. I like to do video newsletters, makes a little bit more sense. But basically what I was talking about is anything but red. If this market is strong, which I do think it is, there are going to be quite a few tickers that are willing to just take advantage of the market as long as it's not going down. So what that really looks like, let me come over here, is that we got about 5 days worth of selling. You can see here in the market, we had a pretty good, very significant pullback, basically starting at the beginning of the year, which is what I posted about and blogged about and stuff. And so that actually happened, spot on. Even talked about here, price coming down to the daily 21. That also happened spot on. And so as long as if the market's going down like that, most things are going to go down with the market. But as long as the market just stops going down, then names can start picking up. And we are starting to see that. There have been quite a few names that were able to bounce over today, yesterday, and the day before. So that's kind of what we're looking for, are the stronger names that are able to take advantage of that. Now, brighter side, you did mention in the comments here something I was going to be talking about. And yes, this is where I think that we have a little bit more work to do before we can really call this a continuation. And that is because we have price going up across the downtrending hourly 50 and the Moxie indicator is below 0. So I'm just not quite sure that, we're going to just kind of keep moseying up from here. I'm a little bit more of the camp that I think we're going to have some more chop before we can really move up. I don't know exactly what that looks like. We never do. Nobody does. But I'm just not sure that this is going to kind of keep meandering to the upside. So I'm kind of looking for maybe another little something. It could come down a little bit further like that. We don't know if it's going to be kind of a retest the low area. Could be a double bottom. Could even be an undercut of the prior low. Don't know. But that's generally what I'm looking for. Part of the reason is if we come over to here and we look at the number of stocks over there, do this, the 50 or the 20-day SMA, we've only taken a little bit of steam off the top. We've gone from 90% to 60%. I'm kind of wondering if we need to go a little bit further. You've seen in the past that, we might get a little bit of a bounce around 60%, but that doesn't typically do enough. If you look at this indicator, it does like to cycle back down closer to 20, 30%. So I'm kind of wondering about that situation. The 50-day SMA, I'm not sure what to say about that other than it is very high. And because this was such a big move, November, December, a lot of names are very far from their daily 50s. And so it's going to take a lot of work for them to come on back down to that. I mean, you can even just look at that with the S&P. So brighter side of what you were saying is, that maybe the S&P, the market, NASDAQ, whatever, need to come back down to their daily 50s. I think that's a little too much for me. If we end up coming all the way down to the daily 50, that seems problematic. It seems like that's going to be a pretty tough and brutal move for the market. Now, possibly what could happen is we could chop around like this, and then over time, the 50 comes up to price. So it might happen that eventually we do see that the 50 and price do meet, but they may not do it in a down sort of way. We can kind of see that example here where price did pull back, and it pulled back a little bit and then chopped twice and then before it went, and you can see that the 50 ended up meeting price. So we'll just kind of have to see how this unfolds. We need to give it a little bit more time. Yeah, there are names that are moving, but I just kind of feeling like right around this area, you can even just look at that. And I'm kind of thinking, this is kind of where this bounce starts to wear out. And so I'm wondering if we're going to get another little bit of a move down, or some chop in order to have price flag sideways. So that's kind of my general take on the market. If we look at NASDAQ, same kind of thing. We've had a nice move, but we are up, going up across a downtrending moving average, and we have the Moxie indicator below zero. Now, the NASDAQ has its 50 much closer. So again, going back to what I was saying is that it doesn't necessarily have to come down to hit price. It can just go sideways a little bit, and then the 50 can come up to meet it. So we have to kind of keep that in mind as well. Let's see. So some of the other things to note out there, if we look at the TNX, this is also part of the reason why the market is doing what it's doing. The market is very sensitive to interest rates right now. It loves the fact that interest rates went down, that the TNX went down basically at the end of October. And this is something that I was saying for several weeks going into this, is that we could see that on the weekly TNX, we were getting into an area where price was overbought, and it's right here specifically, right there at the top. It's getting overbought, and so now we need to see where price goes. Now it's going to be very interesting, and we don't know this yet, but we're going to have to give it some more time. It's going to be very interesting if this actually turns out to be the negative divergence that helps keep interest rates low or keeps interest rates coming down or something like that. But you'll notice that this whole time, price going up, Moxie indicator going up, only now do we have a higher price and a lower Moxie indicator. So I want to be watching that over the course of time and seeing if the TNX continues to come down. But for right now, the TNX got oversold and it's been moving up, which is part of the reason why the market has been moving down, other than everything just being pushed to the upside. And then if we look at the dollar, this is another reason. And you can see here pretty perfectly on the daily chart that we've had this trend line. It finally broke over that trend line. That was a bullish move, but since then, this has been pulling back, and this is another reason that the market has been able to move up, is because the dollar started to fall down. So this is good. This takes pressure off of the market and equities and all that kind of stuff. But again, same thing with the TNX. We have the dollar bouncing, and it's bouncing right off that trend line. So pretty neat, right? I mean, isn't that neat? I always find it very fascinating about trend lines and just how well the market respects it. So from this point, we need to see if the dollar is going to keep moving up or if this is just another bounce in a downtrend. Either way, we're looking for these things to kind of change their direction, and that might help the market start to meander back to the upside. But again, I think that we've got a little bit more work to do. Yeah, we have CPI coming out tomorrow, so that's going to be another interesting thing, see how that works out. But yeah, I don't know. It'll be interesting. It'll be nice to see if CPI isn't really an issue. Maybe the market doesn't care too much about it since CPI has been coming down and inflation's been coming down. Yeah, it's still high, but it's not the runaway type thing that everyone is fearing. And it does seem as though the Fed is going to start cutting interest rates in 2024, which again the market is very happy about and very inflation and interest rate driven. All right. Yeah, brighter side. As far as something like TUP, I just not going to be touching that. We tried it a long time ago, back in 2020, when things were kind of bubbly. I just don't have any interest in something like this. I see that it's kind of been up, but there's no way I really want to be diving into something like that. And let's see, YOU biometric security. Okay, seems interesting. I could see the possibility for that. Volume seems okay. It has about 1 million shares on average. Seems okay. And yeah, I see what you're talking about right there. Potential setup, indeed. But if we kind of look at the higher time frame, right here, it's still got work to do. Yes, this might actually be the point at which these things start moving up because you got the Moxie price trigger and you are finally getting past the monthly 10. But yeah, it's got work to do. So I just have to kind of keep that in mind. Let's see if it's kind of, yeah, look at this. You can see right here, there's a bit of a, let's kind of cut the difference. There's a bit of a level right there, and you can see that price is probably going to have to get past it. It got a little bit caught up right there before, and if it's going to go, then this is probably where it's getting some steam, and then it can kind of move up from there. But yeah, an interesting one. And then, APP is actually on my list. I've been watching this for quite some time. Seems like it's doing pretty well. Obviously, yes, it was overbought, way overbought. So you can see that on the weekly chart, and it got away from the monthly 10. And so far, it's been flagging sideways. So as long as this kind of keeps up, flagging sideways and eventually starts to move, this will be pretty good. My dad is actually in this ticker. So yeah, he came across it as well. Again, where am I? There we go. Trying to get that done. So it's got earnings coming up. Hopefully that doesn't do too much for the stock in a bad way. You never know. They're always a news-driven event. Even if they do end up going up, they can move it down, run your stops, do anything they want. So yeah, earnings is always a bit of a crapshoot. But yeah, it looks pretty good. We just need to see when this thing's going to finally go. I will say, it might be a little bit like Nvidia. So if you look here, it's kind of just been chopping around, flagging sideways for quite some time. And Nvidia has been doing the same thing, and then it finally broke out. So a little late to the party on this one, a little unfortunate. I didn't quite see it until it was too late. I was like, oh man, yeah, missed that. But there are usually more opportunities to get in. Even though you had a big move like this, there are always pullbacks, and so I'll be keeping a sharp eye on something like this to see if there's going to be that. Now, one thing to note. I found this also really interesting. Jesse Livermore, which I think if you guys are a trader, you should know who Jesse Livermore is from back in the day, like a long time ago. But he had a thing called the century mark rule. Call it round numberitis from another coach that I listened to. And basically, humans have this thing about round numbers and big numbers. And you can see that when price gets to something like a 400, 200, 300, 600, whatever, something 100, it tends to stall there just because, kind of a round number situation and a large number. And you can see that 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 NVIDIA has actually done that pretty well. I mean, look at 300, 400, 500. All of these had areas that price either stalled out at, hung out, or something like that. And you can see that this last time, NVIDIA just couldn't quite get past 500 until it finally did. So you can kind of take that feather, stick it in your hat. I don't know if anybody else knows about it, but century mark rule, just kind of look around for, big round numbers and remember that we still, even though there are a lot of computers out there, computers are trying to mimic how the humans trade. So just kind of keep in mind that we got a lot of, human behaviors out there. All right, I'll take a look at one more VOD. Yeah, it's got enough volume, I'll tell you that. But I don't know. It's still very, very early. Still, that's a tough stock to really want to go against. They don't have to do much. They can keep going down. They can chop around. That's a very tough stock to want to try and play. So yeah, I don't see much there. Maybe keep it on your list, but other than that, I don't see too much. Cliff, let's see. Have I thought about creating a more passive portfolio based on Moxie that would own, let's say, 10 stocks that all have positive Moxie price action? More of a long-term account than a trading account. I've definitely thought about that, but I keep going back and forth. I was actually just texting a trading friend of mine, and I was like, man, you know, I pay attention to the put call ratio and the breadth, and I tell you that especially over 2023, those two indicators were extremely important because we were still in a downtrend. So if we look, let me kind of maybe come back over here. Since the market was in a downtrend and we had a lot of big swings, the breadth and the put call indicator were really good at figuring out when it was going to bounce and when it was going to roll over again. I'm telling you, it was really, really good, very accurate. And it did the same thing here. It told us when price was likely to pull back, and then it told us when it was likely to move up. And we're here at the same situation where price is likely to pull back. So yeah, as far as longer term stuff, yeah, I'd love to, but it is so hard sometimes to be able to hang out and ride through some of these things. Like for example, if we were looking at the S&P as a regular stock, and let's say I got a good trade right here as price was crossing over the 50, it is so hard to imagine that you could have a perfect entry right here, and just because you want to hang out for a longer term, you're gonna ride this thing for months and have price come all the way back to your entry, maybe even come back, give back all of your trades, only just to be able to hang on to it for a longer and get a little bit more out of it. I just have a hard time with that, especially when we have tools to where we can tell when we need to get in, when we need to either get out or take profit, and when we can get back in again, and then take a little bit off and then go from there. You can cut this up and kind of make your returns a little bit better, and that's what we try to do as traders. Now, and then that being said, if we look at something like Carvana, I like the longer term. I like the longer term setup. But for something like this, again, pretty wild moves. If you're looking at this, let's say you get, well, 253%, and then you have to pull back, and now you've taken more than half of your position off, only then to come back to the same place that you were at to then pull back and then go up. So I don't know. I kind of look at this then and think, well, we know that we should be getting out here. And we know that we should probably be entering here. And again, we knew we should probably be getting out here. And now I'm looking for an entry again. We should be fairly good at being able to, ride these swings. So Carvana is one, W is one. We're seeing this thing. I mean, look at W. If we were looking for a longer term something, and we were able to get here, here, and here, look how many opportunities we had for big moves that just didn't do anything, that we were just sitting on. So, it's like we would have given up 100% three different times. Yeah, basically almost 100% three different times when we could have had those things in our pocket. And then I look at, Wayfair right now, and I'm very close to wanting to get in again on Wayfair in this area. Let's see, what's a DCA? Entry once Moxie goes positive with profit targets. Yeah, Cliff, what's a DCI? Maybe I'm a little thick right now because I'm on the mic and can't think of acronyms, but let me know what that is. Yeah, I just have a hard time having to ride through some of these things. Of course, then I do look at other names that have been going up. Let me just kind of think, now even this, has had pretty big swings. And it's just so hard. Sometimes you look at other stuff and they go up, and then they're not good longer term stuff. I mean, I even look at how about Tempur-Pedic? So, maybe something around here. Sure, could have had a good trade. 70%, but it took 430 days. Dollar cost average. Okay, I've actually never heard anybody abbreviate that. But yeah, thanks. So I don't know, it just makes sense. Here's a good place to get out, and then you can reconsider it. And again, good place to get out, and then reconsider it, and then a good place to get out. That's what I'm looking at. I just see these bigger swings, and I'm like, gosh, it's so hard and almost a waste of time in order to ride something like that out. And it's so frustrating to get in, get a big move, only to give it all back again just to get a little bit more on the upside. So if anything, Cliff, if I were going to try and practice something longer term, I've got to still be active with it, because if I'm going to get in here and I can tell that this is getting risky, I'm taking half, if not a little bit more off. Maybe I take 3/4 of my position off, and then that way I'll let it come back down, and then I can get back in maybe with a full size. So now I have, say, 1 1/4 sizes, and then I come up here, and then I can take a little bit more off there. So yeah, I would have to be a little bit more dynamic. Maybe I'd be interested in saying, okay, this is a longer term move, but I still got to play around with it, because even like now Chewy, this is not a great example of a longer term chart, because it's clearly not ready. This is one of those things that the way that I trade, the way that I teach, and how I show you guys, we took a trade right here. I could definitely tell you that this thing was not one of those longer term, let's hang on to this thing, because it's still trying to actually hammer out a bottom. So the likelihood of it coming up and coming right back to where it began is very, very high. So maybe context. Maybe context is a thing. Because if you look at, say, let's just go with Amazon. Amazon has also been one of those, pretty good names that has been steadily moving up. Yeah, maybe this is something that you want to trade around. Maybe you can take a little bit off here, and then you can kind of get back in here. Maybe when there are areas that it's getting a little too high, you sell some calls against it. But I'd have to be a little bit more active, because really just sitting through something like this, you're going to be giving a whole lot back anytime these things pull back. So that's my personal thing about this. All right, let me see, kind of, yeah, dollar cost average. Dollar cost averaging is tough too. So let me kind of answer that question. I think I basically did, but I don't think I would dollar cost average. I think I'd have to still be a little bit active. Take some profits at the top, be willing to hang on to a little bit as it comes down, add more when you can tell that it wants to come back up, and then take a little bit off if it gets a little too overbought, and then, wait for a pullback and then add it back in. So maybe always kind of keeping a core position, but adding and subtracting when you can tell that the ebb and flow is there. Yeah, and Cliff, I do agree. So I am trying basically something like that. I do think that we are entering another bull market, so I'm trying to not be too, frivolous with the trades. For example, we are in Hive, so exactly what I just told you about being able to kind of work around these things. How about Hive? So let's look at this, because this is me practicing what I just am preaching. So we got in Hive right there, and we took half off right there. In fact, we even added some right in the middle. And then we took half off. And that was a good size move. I mean, that was roughly 45%. And you realize that Hive actually came right back to where it started. So if I didn't take anything off, we would have given back all of that gain. Now, granted, I think it's going to go higher, but I was able to pocket 45%. And yes, it came all the way back to my entry, but that's okay because I was already profitable. I already put money in the bank. And now it's come back to my entry. It came down to like break even, but now it's back up again. And so now I have the comfort to be able to sit on this thing and just say, okay, well, when do I need to add more back into it? Because I already pocketed stuff. And that's what I'm looking for because now this is starting to look pretty good. I mean, look, it looks like it's trying to find support in through here. So maybe that answers your question that I do see the Bitcoin miners as a longer term trade, definitely. And I would like to continue to hold a position just in case I don't get my next entry quite right and maybe this thing takes off on me. But I still think it's prudent that when you see something really far up here to take some off. Because even look at the last time. I mean, if you had gotten in here and you rode this up, you actually went negative. So yeah, it's just kind of hard to say, oh, I'm going to hold on to this forever and not act with it. Yeah. So hopefully that kind of gives you guys a little bit of food for thought out there. Yeah, it would have to be a pretty dynamic passive portfolio. Yeah, I get you. And let me keep talking about some of these things. If we look at GTLB, that looks like something I want to be in for a long term, definitely. But you know what? Probably also prudent to take some off right there. Because we can tell when these things are overbought and when they are just, too excessive and likely to pull back. So take a little bit off and then maybe you can find where you can add a little bit back in. GTLB, PATH, this is another one. Look at that. And you can see that, this is a good spot to just take a little bit off. And maybe if you don't want to take some off, but you are okay with options, maybe you can sell some calls against it. And then eventually you do that long enough, you actually end up having a free cost basis. Because you've sold so many calls against it. Maybe. And you have to see if these even have options to work with. I'm just kind of sticking some ideas out there. Yeah, David, you pretty much said it. Don't add to the losing position. So yeah, that is if we were to say what dollar cost averaging really is, just because man, I tell you, I got a lot of friends that because they know what I do, they say the same thing like, oh yeah, I believe in the stock and whatever, and it's just cheaper now. I'm going to add to it. It's like, man, no, you can't. You don't want to add to a stock that is at least going down. That's negative. If you're going to do that, then at least find something that's in an uptrend and you're trying to find pullbacks in an uptrend, not something that is in a downtrend. And you know what? As simple as that sounds, it's really tricky. It's really tricky sometimes to know the difference between a pullback and a stock that's in a downtrend. I think if we could definitely answer that question, then we would all be making a ton of money. But yeah, look at Squarespace. I think this is another one that I think looks pretty good, and I'm kind of interested in trying to see if this thing can go for the long term. We were trying to trade it. I think it was like right around here, and it just wasn't ready. You can see here was the pullback where it was too overbought and came down to the 20 It looked pretty good, but eventually it said, nope, I actually want the 50. So that's another one that would be a little bit tough to want to hang on through all this. That's a long time to just have to hang on to something. And you look at it every day and you're kind of sweating over it and you're like, oh, what's this doing? And then, of course, the human nature is that probably by the time it makes you too nervous and you pull the plug is when it starts to move up. you know? Yeah. Let's see, B1. It's hard to, I guess, play volatility stocks like these long term. They are best for swing trading. If you want long term, you need less volatile stocks. Yeah, that makes good sense too. Makes good sense. But yeah, the volatility stuff, because when they just like Bitcoin, maybe Cliff, I'm answering the question in kind of the wrong direction, because if you're asking about these longer term stuff and here I am talking about Bitcoin, then we're not talking about the same thing. So maybe something like MRVL, maybe this is a little bit less volatile. Let me kind of clean this up for us. But yeah, something like MRVL, look what it just did. It's pulling back into larger time frame support. So Cliff, also to that point, the reason why I'm looking at this market and saying, hey, I think we're here longer term, look at the change. Look at what's happening now. We have gone from a downtrend, and then we broke out from that downtrend, and now we are pulling back into a longer term time frame uptrend. So yeah, look at MRVL. That looks good, doesn't it? So yeah, something like that would be great for longer term. And maybe even, I know 2020 was obviously a huge exception, but if we kind of come back here and look at these things and say, well, longer term, I think there are still times that we know, hey, that's probably going to be a good dip to buy. Let's drill down and see where it is. Obviously, that was 2020. But then you can kind of see here, pull back to major time frame moving averages might be a consideration. But then I think we can also tell, like, hey, that's probably a good time to just take a little bit off, because it does pull back and does pull back. And I think that's about it, because then we get the end of the market, and that one was a blow off top. So, the other thing is, if you are going to hold long term, I think you still need to know when to exit, because just because you have a long term doesn't mean you want to be able to ride through something like this. If we talk long term, I actually went so far as to put my 401k into a cash similar option. Like I basically put it in cash, because I could see what was happening with the market. If we look back here, I'm trying to think when I actually put it in, but I think I put my 401k into cash right there. And then I started actually putting my 401k back. What was it? Yeah, probably right around there. I started putting my 401k back into the market. It's a longer term thing. We don't have a lot of control over it. Basically, you just say, hey, you want small cap, medium cap, foreign, domestically, what do you want? And so I just wanted to be in the market or out of the market. And I saved myself a pretty good penny by doing that. Let's see. Do you wish you had done something like this in 2020 and 2021? Well, actually, I just think I answered that question. I did do that with my 401k. So yeah, let me show you. I have a ticker here. Let's see, DODGX. So here's one of them. Yeah. So I put my 401k, a component of it, right there. That's when I chose to get back into the market. Pretty good, huh? So, but maybe the timing wasn't perfect, but that was I would say that was as low as I could probably get it for this market. And then let's see, HISCX. And see, this is the other thing. I don't know if you guys know this, but find most of the ETFs or most of the things that your, say, 401k, your IRA, or whatever your company has for options, they have tickers. Go look up the tickers. Here we are, we're traders, and we look at charts all day long. Go look at them. Now, they won't do anything on the hourly, barely the daily, because these things are ETFs. They really only, need to show you what they did each day. And so these are longer term stuff. So you know what? If you look at something like HISX, which is small cap, okay, small caps got murdered. Wouldn't you have liked to have exited anywhere up here? Because look what happened. This thing went down by 42%. So if I was in this, I would have gotten out right there. And you know what? Where did I get in? You guys see my X? That's where I got back in, as far as a longer term thing. And so yeah, look, up, down, up, So I guess I was negative at one point, but this is my 401k, and I figured I just want to be in at the low of the market, and that's what I did. Now let me show you, let's see, VEVRX, is this the big cap? No, that doesn't look like it. That's going to be something else. How about TRBCX? Yeah, so this one is the big cap. So TRBCX, price blue chip growth. Okay. So same thing. Wouldn't you have liked to have gotten your 401k out of here? Because everyone was talking 2008 type scenarios. And I thought, you know what? I was pretty young at the time. I was barely starting to work in 2008. And everyone was like, oh my God, my retirement, I just lost 50% of my retirement. And I remember these stories and like, well, I have a 401k now. Maybe I should do something about this and just, sit on this thing and say, like, oh, I'm not going to touch it for 30 years. Be like, no, I'm a freaking trader. I can control my 401k and I should probably do something about this. So, wouldn't you have liked to have gotten out here because this thing went down by 40%? You would have saved yourself 40%. And then you know what? Look at the X. Look where I put money back in my 401k into the market. People say you can't time the market and stuff like that. But, in situations like this, when we have a really big situation on our hand and the market is like really rolling over, you can do something about it. And look where I put it in. Right before price got over the monthly 10, and wouldn't it have been nice if you exited right here as price broke the monthly 10? Just look at your bigger time frame moving averages. Even the DPO is back up. So yeah, this looks like Amazon because this is like the growth for blue chips. And what is it? This one I'm up 32% on my 401k. That's pretty good timing for the market, and that's long term. So yeah, if you could do something like that. Let's see, Cliff, I guess another way of looking at it is if you made a couple million in 2021 and you could have earned another 1 million by creating this long-term portfolio, would that really have been worth it? Sure, yes, of course. With all the time and focus that would go into it. Absolutely. Absolutely. And again, maybe my answer to your question is what I just showed you with this 401k situation. If you can find longer term stuff, if we look at Microsoft, as it turns out, the mega caps were the place to be. If you could kind of just shave it off here, and then if you start going long right here when price starts to get over, say the weekly 30, you got the 8 crossing over the 21, you have price over the monthly 10, like sure, and that's why I started putting my 401k back into the market, is because I started seeing these things start to work out. Now compare that to something like ARK. Well, ARK was very far behind. It is only just now. So ARK is a good representation of kind of the risky, small cap, high growth, beta type names that need low interest rates. And you could see that it took a long time for these things to even do anything, even after they stopped going down. But now look what they're doing. We have a new high in the weekly price for ARK, which I think is telling us that we're starting to see, higher highs, higher lows, and we're in an uptrend. So yeah, now's the time to start looking for those longer term plays. We talked about Carvana, CLOU. This is an ETF. Look at the change. We clearly went through a massive bear market. Even if the S&P and the Nasdaq only went down by, I don't know, 20, 30%, underneath the surface, a lot of names really went down. And you can see here, I've been watching this name for quite some time. You could even see my first little test of an entry right there, and then another thing here. And they're starting to work out. But look at the wave. Wave up, wave down, wave up, wave down, wave up. I mean, look at that. Pretty nice, huh? So they're working. They're working. They may not be like 2020 again, but they are working. So just kind of find areas to shave a little bit off, add a little bit back on, shave a little bit off, add a little bit back on, stuff like that. CLOU, BOTZ, and maybe if you're going to do longer term stuff, maybe do ETFs. I don't know, maybe do a component like that. But yeah, shave a little bit off, add a little bit back on, because that's a lot of swing to have to live through. And I'm trying to think, if you want something long term, MSOS, doesn't this look like you'd be getting in on the ground floor? Now, I don't know what kind of path it's going to take. It could also do, huge swings like that. But doesn't that look like you'd be getting in at the ground floor? It's cannabis. So, take your pick. Do what you want with it. You can also look at something like DT. Here's another one. You can see that things started to turn. Started to turn right there. Shave a little bit off, add a little bit on, shave a little bit off, add a little bit on. And now I'm looking to re-enter. So yeah, I'm really close to wanting to get back into these things. And we look at DT on a lower time frame. Yeah. See, we also knew, because since we eat, sleep, breathe the market, we're more in tune as to what's going on. We knew that after a 2-month rally going into the end of the year, and everything was balls to the walls bullish, what's going to happen? There's probably going to be a pullback. You know what? Even for a longer term account, maybe just take a little bit off. And then what you do, look at that, add a little bit more back in. Maybe just something like that. You know, you don't have to go completely out and then completely in. You're just trying to kind of soften and ease those edges. You know, be a little bit more active if you want to. You know, just some ideas like that. All right, guys. So yeah, kind of fun. Thanks, Cliff. I always appreciate it when you guys speak up and ask questions because that really puts me off on a different tangent and gets it a little bit more interesting than the typical thing of what we're going on. And honestly, you're right. Now that I do think we are going into a new bull market, let's talk longer term. Let's look at these things. Cliff, it sounds like you saw the video that I put out. Was it last week? Late last week or Monday? I don't know. Maybe it was Monday. It was Monday. It was kind of my 2024 outlook. And yeah, I do think that things are going to be looking good because, I mean, just look at the evidence. Look at the evidence. So yeah, cool stuff. Cliff, great ideas. Yeah, I'm looking long term. And, let's keep going with that. So, guys, great tuning in. If you have any more questions that I didn't answer, we're always running those specials. We have the 30% off most things. So if you guys want the Moxie indicator, if you want to come into the Moxie room, anything else like that, now's the time. Check out code new24, and we're running it for another 2 or 5 days. I'm not sure, one of those. But yeah, come on in, get it, and we'll see you in the room. And that way you guys can ask me more questions. We can do live sessions, and really I'm here to help. So let me just know how I can be of service to y'all. Okay? Take care, and we'll catch you a little bit for the Moxie group. I will see you in the options room and Moxie in about 25 minutes. All right, see you then.